It's Drive Time with Holly. Business and consumer news you can trust. I mean, what else are you going to do sitting in traffic?
And welcome to another edition of Drive Time with Holly. I'm Yaffe.
And I'm Holly.
And on this edition of Drive Time with Holly, we have a special guest.
We do. We have a special guest. You know, we owed him a do-over because we had him in studio several shows ago, and we had so much to talk about. We didn't actually get to the topics that we had prepared to talk about, and they're worth talking about, so he's back.
This is because I was not here that week, and I have to keep things in order.
Yeah, that's right. Keep us on schedule.
So we can get the information out to the public. By the way, if you have any questions on anything we're talking about, you can call 407-916-5400 or text to 23680. So, Holly, should we introduce our guest?
Let's do.
All right, so we are talking with... He's laughing over here.
Well, you don't owe me anything. But what a great introduction. Yaffe. And by the way, I missed you last time I was here, by the way.
You missed me?
It was Deborah. Deborah was here, I believe, right, guys?
Yeah, Deborah does a great job.
And I turned to my right, and I was looking for my good buddy Tom Benson, and no, it wasn't you. You weren't here. I missed all you guys.
We just threw
So thanks for having me back.
Yeah, no problem.
Thanks for having me back. Can you guys please make me feel better about something, though, today?
Yes.
I need your reports on this. Has everyone just given up on their diet and how they look at the... I mean, it's the end of the year, right? I mean, you have no idea how I'm just thrown in the towel. My heavy lunches, and I just don't care. Is anyone else like that, or is it just me? Make me feel better, please.
Yaffe has a bag of candy sitting in front of him.
That's your fault, Holly. She brought in York peppermint patties, which I've had like 5. So I don't know if that makes you feel any better.
Not really. I mean, a York peppermint patty I don't think has a lot of calories. Does it?
Well, that's how we justify it.
Okay.
I have been keeping up with my workout regimen, though.
I quit.
Trying.
So I got a little sick like 2 weeks ago. Maybe a week and a half. And then I quit working out then. And then I was like, it's so close to the end of the year.
And now it's
Why
cold.
do I even care? And now it's cold. Let's just have some fattening foods. I mean, the lunches I've had this week have been insane.
I have to admit, when it's cold like this, you want to just give up.
What is your go-to cold weather food? Chili, of course. Anything else that you can think of that, it's cold, I got to have it.
I mean, I like hot wings, but that's my go-to food all year.
All year round.
So
it's cold, hot, it doesn't matter. Don't say that's your cold weather food.
I have a 4-year-old in the house, so macaroni and cheese is always within within reach.
Yeah. You have to. Good. I always tell people this. You have to cut up hot dogs in the mac and cheese.
Oy.
Yeah. It's so good. It's so good.
Hot.
The peanut gallery's chiming in on that. Amen.
By the way, if you're wondering who's speaking, we didn't even get to actually introducing your name. We're talking with attorney Justin Clark, who is apparently an expert on what food you should eat when it's cold.
Food.
Well, I'm just saying, who cares anymore? Because the year's almost over, and we have to have a baseline when we start next year. So we might as well put on a few pounds, and then when we start next year, we're going to make great progress
You'll really
right away.
get a lot out of your investment in a trainer and in the diet. So you'll get more bang for your buck.
I can't afford a trainer. I had to buy a horse. You know this. Who has money for a trainer when you have a 5-year-old who wants a horse?
Well, at least the horse is getting some exercise.
That's right. Yeah, right. The horse is lazy, too.
Speaking of comforting, it's comforting when you're in financial trouble, both with paying your mortgage and maybe credit card debt and different things. It's having an attorney you can trust to handle those issues. So in tonight's show, we're going to be talking about bankruptcy, foreclosure, and everything in between. So that's why we brought Justin Clark in. To tackle some of those issues. I know as the year is wrapping up, a lot of people, you hear them say, I can't wait for this year to be over. They've weathered some things during the year, and we also have, taxes coming up. So I would imagine that the end of the year is a time where people start to reflect. Maybe they're making New Year's resolutions towards saving or getting out of debt or whatever. So I think it's a really well-timed show to be able to talk about here's what you can do better next year. And if you are drowning, either in debt, whether it be your home or personal debt, Justin Clark is here to talk about what some of those options are for getting out of debt.
Yeah, it's one of those things that nobody wants to go through. Everyone hopes they never have to go through it. But life hits you sometimes, and you have to go through it. So we want to inform you on the right steps if you have to go through this process.
So, and thanks, guys, for having me. I really do appreciate it, and I always love seeing you guys. And I think this is the time of year where you really start to reflect on the year behind, but maybe even more importantly, let's look forward to the year ahead. And this might sound juvenile or stupid, but I know I do it for my business, and I certainly do it for my personal use, is you got to have a goal list. You have to really sit down on a big piece of paper, or if it's me, I use one of those big, poster board type things. And I've already done this for 2018, and I do it for, it says Justin Personal 2018. And what do we need to get accomplished? And you really need to write it down. You need to see it at least once a week, and then hold yourself accountable for that. And if you find yourself in some pretty bad financial trouble, that needs to be right there on the top of the list. Health has got to be number one.
Yeah.
But then your financial health has to be number two, because your financial health will lead to the deterioration of your real health.
Yeah, I was going to say those two things are definitely related.
Right.
And so people come to me all the time with whether it's a bunch of credit card debt, or they haven't made their house payment, or even more scary sometimes is they owe money to the IRS, or they haven't filed their tax returns. There's nothing more scary than getting letters from Uncle Sam, from the IRS. That certified mail with the green sticker on top that when you go to the mailbox, sometimes you just close the mailbox. You don't even want to get it out.
Right.
There's nothing more scary than that. And so if you have a bunch of unfiled returns, if you haven't filed taxes in a few years, or you owe money from past years where you have filed, you have to make this goal number one financially for 2018. And let me tell you a little secret. It's not as scary as you think. So the IRS and the government needs money more now than they ever have. Right?
That's the truth.
This is a later show for you to talk about. But the government needs money now more than they ever have. So they're coming after people more now than they ever have. But there's a good side of this for you. Because they need money, they're cutting better deals with my clients who are trying to help. So you might owe $100,000 and you think your whole life is ruined, but maybe not. I mean, we're going to paint a picture to them and do what's called an offer and compromise, where that $100,000 might be settled for $2,000 or $5,000 or $10,000. You just don't know.
So it's not in their interest to put you in jail or something.
It's not. They want to work with you.
They're not going to get any money out of you.
Right.
Yeah.
I mean, they're going to look at it like a business decision. So yeah, if you have a ton of money, then yes, they might come after you. But if you're a regular guy like me or Holly or Yaffe, we're going to paint the picture to them that they're better off getting you back in the system and getting some money out of you, as opposed to continuing to chase you for 3 years and then not getting anything, and then you file bankruptcy. And a lot of people don't know that if you do owe IRS debt, a lot of that could be wiped out through bankruptcy as well. So I really think goal number one for you should be identifying what these financial problems really are. And their problem is when they keep you up at night.
Right.
When you roll that pillow over 3 different times and you can't find the cold side because you're stressed all the time.
Or when you stop checking the mail, stop looking at the mail.
That's a great point. When you don't even want to go see the postman because you're scared of what's in there, it's a problem. When you start to have those feelings, when you come home and your wife or your husband and you're fighting and now your kids see you guys fighting, it creates family problems.
Right.
And it doesn't have to be like that. There are always solutions for these financial problems. And I assure you, if you don't deal with them, it leads to health problems as well. There's no reason not to deal with them. The options are there.
You've probably dealt with people in this situation where they thought it was unsolvable. They were probably having family and health problems. You talk to them for a few minutes and it's like, wow, why didn't I do this earlier?
Well, because for those of us who don't do this for a living, the problem may seem insurmountable, but for someone who does this for a living, someone who may be able to take a look at the total picture and say, look, here's how we're going to attack this, one strategic move at a time. Now, let's be clear. Holly, Yaffe, Justin Clark, we are all advocating that you pay your bills.
For sure.
And that you pay your debtors and that you are a responsible tax-paying citizen. That being said, I think Justin can probably tell us better than anyone that there are circumstances in life where things happen and people find themselves in a snowballing situation. And the people that you owe money to, the government, you're not doing anyone any good if you continue to let the problem snowball. So that's where an attorney like Justin Clark can help you tackle the problem, remedy the situation, and let's get you back on track.
what happens is, look around, drive by a hospital tomorrow. Do you see how many cars are parked at the hospital? Do you know how many families are going through a difficult time medically? Whether it's a kid has a problem, or husband got cancer and can't work, or families going through divorce and now we have to pay 2 households on the same income. These aren't really problems that you're choosing to go through. I mean, I guess maybe divorce, but things happen in life. So my clients who come in who are going through a tough time, they're not just out there to screw everybody. They're not. I mean, things happen in life, and you really just have to deal with it. And the most rewarding part of my job is when someone comes in and I can see the stress. It's all over their face. I meet with 4, 5, 10 families a day, and I see the stress on their face. But after I talk to them, explain that there are options available, and then I see the stress relief by the time they leave. And I tell them this every time. I say, I will not let you hire me right now unless you promise when you walk out of here, you're going to get a good night's sleep for the first time tonight. I literally say this to them because that's what it's all about. That's what I'm there for. Get some rest.
And I can imagine that by the time they actually get in your door, they have already spent way too much time trying to solve this problem themselves.
They have. They've made it a part-time job trying to call these people, working out solutions themselves, where it's taken away from their family time or their work time. They're missing work to try to deal with these financial problems, and it's snowballing. Right. So you just hire someone who knows what they're doing.
Who has the tools.
You got it.
And so we've been talking generally about a few different problems that can affect a person and lead them into that situation. In the next couple of segments, we're going to get a little more specific. So we mentioned taxes, we mentioned foreclosure, we mentioned bankruptcy. We're going to go through each of those points and tell you what you need to do in those situations to better your situation. So you are listening to Drive Time with Holly. I'm Yaffe.
And I'm Holly.
And we will be talking with attorney Justin Clark next.
Welcome back to Drive Time with Holly. Business and consumer news you can trust.
Yes, you are listening to Drive Time with Holly. I'm Yaffe.
And I'm Holly.
And we're actually talking about a subject that might not be the happiest subject.
Or most comfortable.
The most comfortable subject, especially this time of year. But it's something, we're going to give you information to relieve some of your stress, basically.
I think knowledge is power. And yes. I think, to Justin's point earlier, the sooner you know what your strategy is and what your resources are, the sooner you can get a full night's sleep.
Yeah, exactly right. And who doesn't want a full night's sleep? I'm not a good person without a full night's sleep.
No, I need a good 8 hours. And then if you tack onto that, you're worrying about something, you're tossing, you're turning. And then when you wake up the next day to tackle the real world, it all seems a little bit worse because now you're stressed, now you don't feel well. And
at this time of the year, we're getting close to tax season. So that is definitely something that a lot of people stress about this time of the year. So we're going to give you some information if you have some tax trouble, if you have some IRS trouble, on what you can do in that situation. So we're bringing back on Justin Clark, who is with us in studio. And
thanks, guys. And tax season. People say, oh my gosh, it's tax season. The funny thing is tax season is actually a lot of fun for most W-2 employees. That's the time that you get your $3,000 back or your $2,500 back. So for the most part, the people who have tax problems are self-employed. That's the general rule of thumb, because the self-employed people are the ones who are sometimes paying their own expenses out of the corporate account, or maybe they're having some payroll trust issues or whatever. But for the most part, the people who have tax problems and who hate to hear the date April 15th are people who are self-employed.
That's interesting. I never thought about that. But you're right. Especially people who own their own business, maybe an independent contractor, where they're trying to, maybe play fast and loose with deductions and things like that. I would imagine that unless you have sought professional guidance or assistance when filing your taxes, you have to be really careful, because you could get yourself into a lot of trouble. And then once you've been flagged, potentially, your problems could be compounded if the IRS chooses to audit you a few years back.
Very true. And so generally speaking, here's how it works. So someone has a job, W-2 employee, no tax trouble at all, In fact, they love February 1st because they're going to get their refund. And then they become an expert in their field, and they want to go start their own business. Now, they might be an expert in their field, but that doesn't mean they're an expert in QuickBooks or an expert in filing their own tax returns. So they spend so much time. Anyone who started their own business know how much time it takes, and you have to put your whole heart and soul into it to make a living, to pay your family, to pay your employees, that a lot of times you either don't have enough money to hire a good accountant, or you don't have time, or you say, oh, my wife or my husband's going to do the books, and then ultimately you get yourself in trouble. And then what happens is at the end of the year, you haven't been paying any quarterly taxes, and maybe things are tough in December. So you come to the end of the year and you owe money for taxes, but you don't have any money to pay, or you're just not comfortable spending the little bit of money you have left in the corporate account, and then you get behind, or you don't file the tax returns for that year. And then inevitably the IRS doesn't send any letter, or they might send one little letter, and you get further behind the next year, and it just becomes easier not to deal with it. But then we get down the road 4 or 5 years, and you have 4 or 5 years of unfiled returns, or you have 4 or 5 years of owing taxes. Now we're at a point where they're really going to come after you, they being the IRS, and they're going to send you a letter, and it's going to say notice of intent to levy. So the IRS isn't like Amex. You don't pay Amex, they have to sue you, go down to the courthouse, get a summons, have someone go serve you at your house. The IRS literally only has to send you a letter and call your employer, and they start taking money out of your paycheck. Or they send a letter to Wells Fargo where you bank and take money out of your account.
Wow.
This is all done via letter. This is not done via court order. So the IRS is literally the world's largest debt collection company. I mean, that's all it is. It's just a big debt collection company with much more powerful tools than an Amex or a Bank of America has. They just have to send you a letter and come take your stuff. So you don't want to bury your head in the sand when it comes to dealing with them. So if you start getting these letters, the nasty letters from the IRS, you need to deal with it. But the beautiful part of it...
Yeah, I was going to say, you've been saying the scary part.
...is there are many ways to deal with these problems. And Holly, I'm always, when I come on, I'm so afraid that I'm monopolizing your show. So please, you cut me off anytime you want, okay? But so number one, 3 main different options we have when we're dealing with the IRS. So we're going to get you filed. We're going to file your tax returns and say, look, my guy's been busy. He's had some issues, whatever. He wants to get back in the system and be a good, upstanding taxpayer.
And that's what they want.
That's what they want. That's exactly what they want. And they don't have to spend a ton of money chasing you. So now we're already one step ahead. Now, keep in mind, we work with these people at the IRS all the time. If you want to handle this yourself, you can do it. Actually, the office is just right down the street. But you could wait there for 8 hours before you see anybody.
I was going to say, do they really take walk-ins?
Yeah, but you have to wait forever.
Yeah.
And you could call them if you want, but you can wait on queue for 3-4 hours just to talk to someone. And then when you do it, this isn't your line of work. You don't know exactly what you're doing. So if you're going to do it by yourself, just be wary that it's going to take a lot of time, and also understand you don't know exactly what you're doing. So be careful if you're going to do it yourself. But the main option that we have right now is called an offer and compromise. What does that mean? It's a settlement. It's a fancy word for a settlement. You owe the IRS $100,000. We want to give you this fresh start with them, and we want to settle for $5,000 or $10,000 or zero sometimes. And why not? So we're going to file all your tax returns, see how much you owe for all these years you haven't filed, or deal with the back taxes that you already owed, and then settle it. Now we're done. Now you don't owe them anything. You've got to promise that you're going to stay clean for a while. When that's fine. After going through it, you're going to want to stay current.
Yeah, you don't want to end up in that boat again.
You don't want to do it again. But, I mean, what a great resolution to have all of that off of your head.
I'm assuming, though, that if you take that route, you can expect, and believe me, I imagine this would be the least of your worries, but I would imagine, and obviously correct me if I'm wrong, if you take a settlement, can we assume that's going to affect your credit?
No, it's not. I mean, so a lot of times you are going to have a tax lien against you already, which absolutely affects your credit. But as part of the offer and compromise, we're going to get that lien removed. And
so it could help your credit.
It really helps your credit. And people don't understand that either. So when you think of lien, you're like, okay, so if I own a house, I have a lien, the mortgage. But a tax lien can be filed against your house, but it can also just be filed against you personally in the county records. So a lien doesn't have to be against any property at all. It's just against you. And that absolutely affects your credit. In fact, that affects your credit maybe more than anything. You go buy a car, whatever it is, they're going to search for it and see this tax lien, and they're like, whoa, this guy's got some issues.
You look like a bad gamble.
You look like a very bad gamble. So getting that lien removed through this offer and compromise process helps your credit substantially.
We're talking a lot about what to do after the fact, after you have problems with the IRS. I'm kind of curious about preventative methods. Are there common problems that you see over and over again that you say, you could have done this to prevent this from happening?
It's the same problem every time. And if you're listening and you are a business owner, you know when you start your business, it's hard. You're trying to make money. You're working 24/7. You don't have a good accountant, and you think you can do it yourself, and you just can't. From day one, as soon as you open that business, as soon as you set up that LLC, hire an accountant and do what they say and make the quarterly deposits. You won't regret it. I know it's an expense you probably don't want to pay right out of the gate, but you need to. Hire an accountant or CPA from day one who's going to guide you in the right direction, and then you won't have these issues.
And it's probably also one of those expenses that if you establish your business with that expense in mind, it's an expense that you'll learn to live with. And it's kind of like having a deduction taken from your paycheck. Once you come to, you're used to that amount in your paycheck every month, and you kind of forget that you're putting money aside in your 401k or whatever. Because if you don't have it in your hand, you can't spend it. If you go ahead and set that plan up where you've got a CPA or you've got an accountant to help you with that right off the bat, then, you've built that expense into the cost of doing business.
Fully agree. And be very careful about, there's one other addition for business owners that you need to be very careful of, and it's called the trust fund taxes. You get a paycheck here from iHeart, right, Yaffe?
Yes.
So they withhold money for taxes, and then they send that money directly to the government, right? You don't, keep it out and you send it yourself. They send it. But the employer is responsible for sending this money. So it becomes easy for a startup company to give you, let's say your paycheck is $2,000 gross, but you're only going to get $1,500 net because $500 is going to taxes, right? So I'm going to give you $1,500, but as the business owner, I still have the $500 in my account. So you need to make sure that right away, as soon as that payroll's over, you send that trust money to the government because it's on you to do it. They're not going to just call you every week and say, send that money. So you need to have a payroll company or have your accountant do that, because what happens is it stays in your account, money's tight. What do? You spend it.
Right.
Now the IRS is mad. If you withhold the trust fund taxes, the IRS is mad, and they take that very seriously, and it's a little bit of a different process than what we're talking about. So as a new business owner, be very careful with your employees' tax money and send that in right away.
So we've learned a lot about what to do to prevent problems with the IRS and what to do after the fact if you have problems with the IRS, because we want to make you better prepared, especially because tax season, like we mentioned, is coming up pretty soon. In the next half hour, we're going to get into bankruptcy. We're going to get into foreclosures. Justin Clark is also an expert on those two things, so we're going to inform you about that as well. You're listening to Drive Time with Holly. I'm Yaffe.
And I'm Holly.
And we will be right back.
Welcome back to Drive Time with Holly. Business and consumer news you can trust.
Yes, and welcome back to Drive Time with Holly on this, to me, it's cold Florida evening.
For Floridians, yeah. I had a conference call this afternoon that went for a couple, 2.5 hours. And about halfway through, I had to go scrounge up like a fleece blanket in the office because I was chilly, It's cold to us. We have a right to our opinion. It's cold to us.
I am such a cliche Floridian when it comes to the cold.
It drops below 70. You're like, get out the puffy vest.
Exactly right. So we have been talking about tax season. Tax season is coming up, and some people might have problems with the IRS. Might want to prevent having problems with the IRS. And we were talking with attorney Justin Clark on how best to handle those situations. And before we continue on, Justin, I wanted to give you an opportunity to tell people if they want to know more about you, if they want to know more about what you do, how can they reach you?
Absolutely. YouHavePower.com. We've tried to make it real easy for you. YOUHavePower.com. Phone number is 321-282-1055. And I'm all over social media as well.
Yeah.
Reach out anytime.
All right. And so one thing we were talking about with the taxes is, Justin, your advice was to prevent problems, hire an accountant. But sometimes they don't do that. They come into problems. They go to your office. They have to deal with the IRS. But what do they do afterwards? Do they have Do they continue working with you with an accountant at your office, or how does that work?
They do. So if you do have problems, there are options, right? We talked about the offer and compromise. Fancy word for settlements. We're going to go back and settle your old tax debt. If that doesn't work for whatever reason, we can do what's called an installment agreement, meaning, okay, yeah, I know IRS owed you 20 grand, and then by the time you get to me, it's 50 grand. Let's do a penalty abatement, get rid of all that extra stuff, and let me pay this 20 grand over a few years at an affordable amount per month. So the offer and compromise and installment agreement is a way to really clear up the past issues. So now the past is over. But again, I'm a small business owner. I'm busy. I'm working 24 hours as it is, 7 days a week. I don't want to get in this problem. I don't want to have trouble like this again. What do I do? And that's when you need to hire someone like me or my office. I mean, we have an entire accounting department there for people that we've helped to where they don't get in the same problems again, where they don't go through the same exact cycle of not paying, deal with it, not paying, deal with it, because eventually it's going to catch up with you. So whether it's you stay with us, and we have the entire accounting team there, or go with someone else, you need to hook up with an accountant who's going to set you straight. You need to make those quarterly payments where at the end of the year, maybe the most you could be behind's a quarter. So quarterly payments is really the key.
Right, and I would think they would not want to run into those problems again.
Well, and I would imagine that if the IRS has settled with you once and they've said, okay, fine, here's the deal we're willing to offer you. If you come back to them time and time again, I would imagine their patience grows thinner.
The second time, it's a whole different conversation with them. It's almost like getting a DUI a second time. You get one DUI, okay, fine, slap on the wrist. A second one is a lot worse. A third one? You're going to be in jail for a long time. Now, you're not going to go to jail, but by all means, the IRS is not going to be as easy with you the second time and the third time especially.
So Justin obviously is an expert on taxes and the IRS and tax issues, but he's also an expert on a couple other things as well, a couple other things you might not want to deal with. But like we said, stuff happens in your life that you have to deal with this stuff, and we want to help you through it.
Justin, I would imagine that when it comes to IRS debt, when it comes to foreclosures or bankruptcy, major debt issues, I would imagine that shame is a big part of that. And I would imagine that when people finally get up the nerve, or they've been pushed to the point where they know they have to do something about it, if they get up the nerve to come in your door or to go and speak to a professional who can help them, they've overcome that first hurdle. How big of an issue is the whole shame factor in getting help and stopping the snowball from compounding?
It's huge. Absolutely huge. I have clients that come see me from Lake Nona or Heathrow or Alaqua, right? And they're embarrassed to come in. They really are at first. But again, when we put together this 2018 personal goal list or personal to-do list, and we know we're having financial trouble, you need to come see me with an open mind. And first of all, I would never, ever charge you one penny to come see me. All right? So it's a free consultation, of course. You would never be charged a penny. Ever. I would never do that. And I'll spend as much time with you as you need. And I do see people on Saturdays as well, because a lot of my clients are going through a difficult time, and I don't want them to have to take off work to further compound the financial issues to come in and fix them. So that's why I see people on Saturday as well. So it's no charge. And it's a Saturday appointment if you need to, but come in with an open mind. Don't come in because you went WebMD of law or whatever on the internet, and now you know exactly what you need to do, because likely you don't. So let's come in with an open mind, and let's literally go through everything. Let's go through the entire family picture, the financial picture, and let's see what's really going on. Because sometimes maybe we want to go into the bankruptcy route. Maybe there's just so much insurmountable debt that we need to file bankruptcy. Or maybe you owe $100,000 in taxes to the IRS from 3 years ago, but now you're making $50,000 and you also have some other stuff there. And did you know you could wipe out that tax debt through bankruptcy as well if it's more than 3 years old? So we need to get the entire financial picture. Do you own a house? Are you current on the mortgage? There's this little thing called a Chapter 13 bankruptcy where people will come in and see me, and they have $80,000 in Amex debt. And they have a first mortgage and a second mortgage on their house. And by the time they leave, we've wiped out the second mortgage, lowered the interest rate on their house from 6% to 2%, because you can modify the loan on your house through a Chapter 13 bankruptcy. We've wiped out all the tax debt, So now, instead of having our monthly nut at $8,000 a month when we only bring in $7,000, we've just reduced our monthly expenditure for our entire family to $3,500. Now we have a little money to live on. Right. You know, at the end of the month now, we don't have zero. I can't tell you, Holly, how many people come to my office making $120,000 a year, and literally at the end of the month, they have zero. And here's why. Do $120,000 a year divided by 12. I mean, it's a good amount of money. But then take out the mortgage payment, take out the taxes, take out the health insurance, $1,500 now for a family.
Right.
So by the time you pay all this, there's literally nothing left over to pay $80,000 worth of debt to Amex. For every $10,000 worth of credit card debt, I mean, think in terms of at least $200 or $300 a month. So you get up to $800, you're paying $200 in just minimum, $2,000 a month in just minimum payments.
And you're never going to pay that off.
It's insurmountable.
Right.
You can't do it. You have to decide, do I want to feed my family? Do I want to wipe this out? So don't feel bad about it. Many people have had to do it. My clients are from Lake Nona. They're from Alaqua Lakes. They're from Kissimmee. They're from everywhere. If you feel like at the end of the month you can't pay your bills and you have no money to put food on the table, something's got to change. Something has to change. And just because of the mistakes we made in the past, we can't let them transform our future into a negative future filled with divorce and being mean to our kids and having fights around the house and then health issues because of the mistakes we made in the past.
Well, and I would imagine that if you are going through these financial difficulties and it's weighing on your relationships, and then if you find yourself in a divorce situation, now your financial troubles have compounded. Now you've got even bigger expenses, an even more complicated situation. That's an extreme case, but if people live under the weight of debt and under the weight of these things for very long, something's got to give.
It just can't continue like it is. And you know it can't continue when you make good money and at the end of the month, there's literally nothing left in the bank. That's scary. I mean, do you know how close a large percentage of our population is to having zero money? Mm-hmm. I mean, it's tough out there. I grew up poor. I know exactly what it's like. We've all been through tough times. We've all been through tough times recently. I mean, do you think business is always great for me? Things are stressful. Right. It is. It's a tough life when it comes to money. And when we have these $1,500 a month health insurance premiums, when we have $2,000 going out in taxes, the money goes quickly. And the money goes super quickly when we're paying $1,500 a month at minimum payments for the credit cards.
Right.
The money just doesn't exist. So come into my office with an open mind. Now, many people I say, I think we're in pretty good shape. There's nothing we should do. I'm not going to tell you to do something that's not exactly right for you. I would never do that. And it's not worth it to me. I'm only going to guide you in what I think is the right direction. I would never tell you to do something just so I make money from you. I promise.
Yeah, it seems like the moral of the story, the message of what you're saying is don't let shame, don't let the past bring you down. We need to look towards the future because you're about solving problems.
That's
you're
right.
not there to judge them. You're there to fix their problems and better their future.
Everyone needs a line of demarcation. Don't let the past screw up your future.
And the larger the snowball, the heavier it gets.
Yeah, might as well solve it now.
Right.
So really good advice. You were listening to Drive Time with Holly. I'm Yaffe.
And I'm Holly.
And we're going to talk more about this. We're going to talk about foreclosures with attorney Justin Clark coming up next.
Let's be better consumers. You're listening to Drive Time with Holly.
Yes, and welcome back to the show, everyone. I'm Yaffe.
And I'm Better Business Bureau CEO, Holly.
And we have been talking about several different topics surrounding the topic of financial issues, financial problems, financial hardships, and how to get through those financial hardships, and giving you advice and maybe making it not quite as scary as it has to be.
Yeah, using a professional to help you kind of wade through the decisions, form a strategy, get yourself out of trouble, and move forward in a healthier state so that hopefully you don't end up in that situation again.
Yeah, and in Florida especially, but across the country, one thing that can cause financial hardships is your mortgage. Sometimes you have to refinance. Other times you have to go in foreclosure. It's just a reality of the world we live in today.
Yeah, that's right. Justin, would you say that where we are today versus where we were, say, 8 years ago, 10 years ago, have the number of foreclosures, have they dramatically dropped, or are we just not hearing about it like we did 8-10 years ago?
They have definitely dramatically dropped. Thank goodness. I mean, the glut of and Tom Benson could do a whole show on this probably. We've talked about this on these airwaves a few times, but they've dropped dramatically. So let's face it, 2006, peak of the market. Crazy, crazy prices. You're lucky to even get an offer accepted, right?
That's right. What a coincidence. I bought a house in late 06, early 07.
And same as I.
Right.
And also you didn't have to put any money down. Everyone's like, oh, just do an 80-20 loan.
Houses for everyone.
So houses for everyone. You had to have a pulse and a pen, right? And
right.
You could get a loan. 2006 was the absolute peak of everything. And then you remember the Bear Stearns collapse, 2008, then 9, 10. That whole time was absolutely horrendous. Now, as we sit here in almost 2018, I think we've come back to about 90% of 2006 prices. 90%. Some places 100, some places 80. But on average, we've come back to about 90%. So if you're one of the people who have ridden out the storm, so to speak, and you're still in that house, the one lingering thing that you might have going on is your rate might be a little high. You know, your neighbor came in and bought a foreclosure in 2011 and paid $200,000 less than you owe, and they have a 3% rate. So you're kind of upset about that.
Right.
So you're wondering, well, what are my options? I'm stuck at 6.25%, and my neighbor owes $100,000 less than I do, and is at 3% rate. And so this is not fun. You don't like this.
I still have my job, but I have a high interest rate. I'm not behind on my mortgage. What are my options? It seems like that if I'm paying an interest rate that's 3% higher than my neighbor, is there something that I can do? Is the federal government offering deals, or are there plans that I may still be eligible for?
A bunch of things that you can do. And number one is, because of all this negativity and your house value going down so low, you probably haven't even thought, maybe I should call a mortgage company and see if I can just get a refi. Because the values have gone up quite a bit and continue to go up slightly, let's just see if you can qualify for a regular old traditional refinance. Because if you were to refi, as we sit here today, you're at like 4%. So the difference in, let's say you have a $300,000 house at 6.25 versus 4% is substantial. I mean, you're probably looking at $500 a month at least that you're going to save. 500 times 12. Now all of a sudden that's $6,000 a year you're saving. I mean, this is real money, and It's not going to really cost you anything to do. So number one is you look at a refi. Let's see if we want to, or if we're able to do a refinance. Number two is you can still do a loan modification. Loan modifications were always thought of as just if you were in foreclosure, that's how you get out of foreclosure. But people do loan modifications even if they're not in foreclosure. And a loan modification, they can reduce your interest rate all the way down to 2%. There's no closing costs. This is not a new bank coming in and paying off the old bank. This is you literally modifying the existing loan that you have. And you can go down to a 2% interest rate. So it's worth looking at. And here's a general rule of thumb. Take your mortgage payment, the PITI, the principal, interest, taxes, and insurance, and see what that amount is per month. And then take your gross monthly income before insurance comes out and taxes and all that, and multiply your gross monthly income by 31% times 0.31 if you're on your phone right now. And see what that is, because that's what your payment should be. And if your payment's more than that, you need to look into a loan modification because you're paying too much. Number one is because you can get a better deal, but number two is because it's sucking up too much of your money per month and you're not going to have enough money to live on otherwise.
Right.
So those are the two things. If you're still stuck out there with a 6 or 7% interest rates, we need to look to see if we can refinance. And if not, let's look to see if we can do a loan modification.
And for some people, that extra money in their pocket per month that they're able to save through a refi might help them start to dig out of debt in other areas.
And that's one of the things we look at when someone comes in, is I want to look at what their rate is now and if we could free up money by doing a refi, maybe being able to avoid a bankruptcy. So when I talk about this goal list or to-do list for 2018, and when I say one of those things is to come see me, it's to do the big picture. Let's really look at what's going out every month, what's coming in, and what are the ways to improve your financial health before that bad financial health ruins your real health.
And we only have a couple minutes here, but the question I was thinking about is why Why do you think people don't look into refinancing? They just don't. They think it's too much of a hassle, or they just think they don't have a chance?
Because it sucks. No one wants to have to go get their W-2s and their pay stubs and their tax returns and all that sort of thing. It's not fun, and also they think it's really expensive. They believe that if I'm going to go get a refi, and that joker mortgage guy back in 2006 was ripping me off. There's a lot more protections now, and I think we've been on these airwaves enough telling people to shop around and not let themselves get ripped off, where they had a bad taste in their mouth from 2006. Things have changed. So don't let any negativity from back in those days affect how you feel now.
And certainly I would tell you that Better Business Bureau, especially, 6, 8, 10 years ago, we saw, players coming into the market doing loan mods that were really messing people up. So I would encourage you that if you're considering bankruptcy, if you're considering a loan mod or a refi, do your homework. Make sure that you look for a professional that you can trust. Check with Better Business Bureau. Look to see, do they respond to their complaints? Because, should you have an issue, that person could be you. Let me ask a quick question really quickly of Justin. Justin, if I'm already in financial trouble, how in the world am I going to pay an attorney to help me get out of it?
Because it's one flat fee. It's very reasonable. You pay me over time, and I promise it's not expensive. It's well worth the money. Flat legal fees.
All right, so we have made you a more informed consumer, especially if you have financial troubles this holiday season. We want to wish everyone happy holidays, of course. We don't want anyone to have to go through this, but we hope that if you do, we were able to inform you to make better decisions. If you missed any of the show, by the way, you can catch our podcast.
That's right. You can go to drivetimeholly.com and also rewind.drivetimeholly.com.
All right, you have been listening to Drive Time with Holly. I'm Yaffe.
And I'm Holly.
And we'll catch you guys next time.